Hi there, and thanks for watching this PipJet robot strategy overview video. As you know, we're about to release our next robot, PipJet, about 3 years after our first robot was launched in 2009. We've waited a very long time to launch a new robot. Lots of people have asked us, why have we waited so long to bring a new product into the market? The reason is really quite simple. It's not easy to create a profitable robot, unlike most people think it is. Today you see so many robots being pumped into the market. It kind of makes it look like it's easy to create a forex robot. And really, the truth is it is easy to create a forex robot. Any programmer can do that. However, it's very hard to create a profitable and consistent expert advisor. That's why it took us so long to launch PipJet. We've been testing the robot for quite some time, working hard on the trading logic, and now we believe that we have what is absolutely the best forex product on the market. Today, we're going to start to introduce to you what this product is all about. We're going to cover two areas: PipJet's strategy, how the robot works, the trading logic, the rules, and we'll go into all of that with a lot of detail. After that, we're going to go into the performance of the robot. We'll cover the accounts, we'll go over those, look at what happened over time in those accounts. And by the way, below this video, you'll see the actual accounts with some commentary about those accounts. But I recommend that you wait. Let me explain how the strategy works and then go over the accounts themselves. Okay, so some general stuff here. The trading session. The robot trades during the Asian session. Based on the strategy parameters, it might exit in the Asian session or in the European session. Sometimes, very rarely, it might continue a bit over the European session, but again, that's very rare. Most trades are open and closed on the Asian session itself. Time frame: short term, mostly intraday trading, meaning most trades are opened and closed the same day. We've said this before, we don't believe in long-term trades. With long-term trades, there are too many occurrences that it's just impossible to speculate and know exactly what's going on. The longer a trade is open, the more uncertain things can happen in the market. The shorter a trade is open, the more certain we are about the market conditions that we're going to be trading in. The type of trading: range. The robot spots and exploits high probability reversals within a very established and consolidated price range. And that's very important. No trending here. No catching trends. We are very anti-trends. We want to find a very well established price channel during the Asian session and trade that price channel. These price channels, if you're able to spot them correctly, as PipJet does, can be very profitable, highly accurate, and we're going to go over that in just a moment. Let's start with the trade setup, and we're going to go over the pre-trade entry criteria. 3 steps here. Step 1, wait until the U.S. session ends. Step 2, establish via price action whether the session was a trending or range-bound session. Step 3, if the U.S. session, based on RSI and CCI indicators, plus Hull MA and Andrews Pitchfork indicators, and you can see the description below, was a range-bound session, then we move directly to the trade entry criteria stage. And we'll go over that in just a second. Just a bit about this, though. How the U.S. session behaves is really important. In trading, we always want to know what the general context of the market is. Since the U.S. session is the session before the Asian session, the U.S. session will set the tone for the Asian session. So steps 1 through 3 here take care of that element. Normally, the Asian session is a range session, meaning price moves in a well-defined channel. But that channel can be an up-moving channel or a down-moving channel. So if the trend during the U.S. session is an uptrend or a downtrend, that would mean the channel in the Asian session would act accordingly. It would be either a channel going up or a channel going down. If the U.S. session was a range session, it would be a channel going sideways in the Asian session. We identify, obviously, how strong the trend was in the U.S. session. We identify if it's part of a 3-day or longer ongoing trend. That's really, really important because that means it's a strong trend, okay, if it's going on for that long. Or if it's a U.S. session only trend, or the trend began following an event, for example, a news release. These 4 elements are very important because the reason for the trend, the strength of the trend, allows us to be better equipped in how we're going to trade the Asian session. Step number 4, if any of the following are true, trade is suspended until the next day. And you can see all of these scenarios here. For example, scenario A, and trend is stronger than our upper threshold. The robot establishes an upper threshold internally. Scenario B, obviously discussed earlier. Scenario C, and trend is stronger than our median threshold. Or scenario D, and the move exceeds our dynamically computed pip limit. Steps 4 and 5 are actually great filters. You don't want to get into the Asian session knowing there are strong moves in the market. You want a calm Asian session that'll be predictable, that's going to allow you a high accuracy rate in determining the low and high of the session. In other words, the low and high of the channel of the Asian session. That's really important. And step number 5, if none of the scenarios mentioned in step number 4 have occurred, then pre-trade criteria is considered met, and we move to the next stage of the trade setup and management process, the trade entry criteria. Okay, so the trade entry criteria. Obviously, all the requirements of the pre-trade criteria analysis have been met. The robot's going to look to enter a trade based on the following 3 steps. It's going to wait until 9 p.m. UTC. Then starting at 9:01 UTC, it'll begin measuring tick volume. We covered tick volume and its importance with the US CAD and how it really skyrocketed over the last few years. That is really, really key behind the strategy of PipJet. It's a huge discovery we made, which is making the robot perform very well. Step 3, wait until both of the following take place. Average tick volume over the last 15 minutes, and that's a great filter, is at least 30% of the average M15. M15 is a time frame. Tick volume of the US session. Number 2, average spread over the last 15 minutes is below 3.3 pips. And we found that this generally indicates the fills will take place at the average spread or better. So when spread reaches the 3.3 average over a 15-minute period during the start of the Asian session, you're going to get quite a good fill, and quite a good fill when you exit the trade as well, because it indicates a certain market condition is taking place. And obviously, unless both of these requirements have been met, the strategy cannot proceed to step 4. One more thing, if these requirements have not been fulfilled by 11 p.m. UTC, trading is going to be suspended for the day. Okay, step number 4, and this is a very important step because it is part of determining the channel itself. We're looking for 60% of the reviewed bars over the past 30 minutes on a 1-minute time frame to fall within a 30 pip range. And we've tried to change this 60% parameter to, different parameters in our testing. We found that 60% is really the optimal parameter. Anything below won't give us an accurate reading to the price channel itself. Everything above 60% filtered out too many trades. So 60% is the optimal reading that we have arrived at. And then obviously, if there is a confirmation of step number 4, we move to the safety indicators in step number 5. And let's go ahead and review this. For step number 5, we're going to determine that the channel is safe and reliable. When the robot arrives at step 5, it already determined that there is a price channel, tick volume is fine, spread is fine. Now we want to know how healthy the price channel is. We want to know that this is a reliable channel. We want to know that it has a high accuracy rate regarding the established highs and lows of the channel. Obviously, by accurately assessing the channel's length, time-wise, reliability and range, high and low price, we managed to really find extraordinary trading opportunities. So in order to accomplish all this, we designed 2 tools in-house and a third tool, which is not an indicator as such, but more a method to access successful breaches of the channel. Tool A and Tool B. Tool A we call PAI, which is a price action indicator. And this indicator produces a proprietary ratio of price rate of change and pip range. A trade will not be entered if the PAI reading is below 30. Tool B, mean deviation index, MDI. It's important to know that price doesn't stray too far from the center of the range for prolonged periods. This indicator provides a reading between 1 and 70. Anything below 40 results in no trade, as it means that price has been persistently on one side of the channel and there's a high probability of strong breakout. When a price channel forms and price moves up and down within that price channel, and then suddenly it starts consistently remaining on one side of the channel and not going back to the other side, there's a very high probability of a breakout in that channel. These breakouts sometimes result in high price swings. So this MDI indicator pretty much does the job of securing that scenario for us, so it's not going to happen and hurt us. Anything below 40 results in no trade. Tool C, the 1-minute close method. This is a very simple yet very powerful leading indicator. If 3 or more 1-minute bars close 5+ pips above or below the established channel from step number 4, it means that there's a high probability of a breakout and no trade is taken. Of course, if all 3 indicators are in line, the robot proceeds to enter a trade. And the last thing I like to say about this is PipJet's trade entry criteria is very strict. We made it that way because we wanted to filter trades that fell below a certain level of success probability. We wanted to keep its accuracy rate up. The methodology used to enter the trades is based on accurately assessing volatility changes in the market, price deviations, support and resistance levels on different time frames, and other observations. Again, what's important here is to know the strictness of the trade entry criteria. That's one of the reasons for the robot's high accuracy rate. The trade entry based on a proprietary indicator, which is a combination of RSI, CCI, Parabolic SAR, and Fibonacci levels. A buy is triggered when the indicator is at 300 or higher, and a sell is triggered when the indicator is at 200 or lower. And let's go ahead and go on to trade management. When we talk about trade management, we start with the profit objective for the robot. Before we go over that, though, let's look at the inside here. If you've ever designed robots, or if you're a manual trader, you know that one of the toughest parts is the take profit. You know, when is the optimal time to exit a trade? How many pips should you aim for? Everybody knows you have to have a good risk-reward ratio before you even enter a trade. That's important. It's a rule of thumb. But then that doesn't help us that much. It's really tough to know what the optimal, and I stress optimal, place is to exit the trade once in profit. We worked really hard on this part of the strategy. We did a lot of testing, a lot of split testing. We ran quite a few live accounts before we reached what we believe is the optimal mechanism to accomplish this objective. Our research shows that establishing a PIP-based profit objective underperforms over 80% of the time compared to a profit objective based on market conditions. So what traders fail to understand many times is that a profit objective should be placed according to market conditions and not according to when you, as a trader, reach the number of pips you want to capture. That's irrelevant. The market is going to tell you how many pips it's willing to give you. That is the guiding philosophy behind PipJet's profit objective. The robot strategy aims to capture the most pips within the market context. Very important, the market context of the trade. Hence, the indicator-based profit objective method used. Now, let's cover that last part, the indicator used. The profit objective. For buy, long trades, the indicator reaches the 900 level within a maximum of 6 hours from entry. We've tested quite a lot of variations for both the 900 level parameter and the time, the 6 hours that you see here. And obviously, because this is how the robot is trading now, this is what we found was the best. We started being a little more liberal at the beginning. That 900 level was actually 700. We found that we weren't capturing enough of the profit potential the market offered in the context it was trading at that time. We moved it to 900, and that really did the job, as well as the 6 hours. In the beginning, the 6 hours was 12 hours, and then we lowered it to 9 hours, but 6 is really just the optimal setting for both buy and sell take profits. If the 900 level isn't obtained within 6 hours and the trade is in profit, the strategy implements a trailing stop. For sell short trades, the indicator reaches the minus 200 level within a maximum of 6 hours from entry. Again, we did a few tests with different numbers, and the best results are being reached with these numbers that you see here. That being said, we do update the robot continuously. If you're a forex megadroid customer, you know we update our robots every single time there is a need. Maybe changing market conditions, changing technological or regulatory conditions. We update our robot every time there is a need. We constantly monitor for the best parameters. You know, market changes, there's no way around that. If you've been part of our team, you know we react very fast and update our clients at no cost whenever the need arises. If that minus 200 is not obtained within 6 hours and the trade is in profit, the strategy implements a trailing stop. The lifetime of each trade has an 18-hour maximum. I'll mention that it's extremely rare for a trade to be open 18 hours, so you don't really need to worry about that. The stop loss, basically what happens with the stop loss in simple terms is the robot initially computes a maximum and minimum stop loss limit. Then it computes the desired stop loss based on volatility and range of price motion from the previous day. Again, you see what we're doing here. We establish context. What is the market doing right now? Depending on what is going on right now, the robot acts accordingly. Although initially it does compute the maximum and minimum stop loss limit according to today's specific market conditions and what's going on, the robot computes the desired stop loss based on volatility and range. If the desired stop loss is more than maximum and less than minimum, it uses the maximum and minimum stop loss that it computed initially. Otherwise, it uses the desired stop loss that it computed according to market context. Okay, guys, that is PipJet's strategy. I know it's a lot of information for somebody who isn't a trader and hasn't been doing this, and that's fine. The thing that's important here is that you need to know what's going on behind the scenes. At the end of the day, the robot's going to do everything that it does, and it's going to do it really good, accurately, and profitably. But as the developers, it's important to us that you, as a client, know what's going on and what the robot is doing. You know, not just plug the robot in and let it go, but that you know what it's doing, and we insist on that. All right, I'm going to wrap this video up, and in the next video, we're going to deal with the performance of the robot, and I hope to see you there.